Welcome everyone. Quite a few familiar faces, which is good. Is that better? That's better. G'day, as Pete said, my name's Dave Gulson. I'm a M&A advisor with Prime Financial Group, which is an ASX-listed financial services provider. I had the pleasure of working with Pete and co-owning a business with Pete in the late teens, and so what felt vicariously have sort of watched the evolution and his evolution of EtA and search in Australia and New Zealand over that time without realising that actually I had been active in it just from a different lens. And that's from a perspective of I've sort of built a practice as a sell-side advisor transacting 1 to 7 mil EBITDA businesses in Australia and New Zealand. And what 6 or 7 years ago was really selling those businesses into either a PE-backed platform or into a corporate. Today sees any process that we're running almost always have a searcher or an operator in there looking at that asset. And so as I said, whilst I thought vicariously I was watching Pete, we're actually participating it on the other side. With me I have here Ben Harrison, who's the Chief Investment Officer at Altor Capital, and Chris Flavell, who's a founder and director at AraCapital. I'll go into a bit more of an intro for that, or let those guys introduce themselves a bit better shortly. But what we're ultimately here to do and hoping to achieve is just provide some insight into sort of the profile of investors and what they look like and think about, to help sort of frame up how they think about backing searchers and operators. As I said, Ben is the CIO of Altor. Altor is an alternatives asset manager owned by Prime Financial Group. So Prime, we have corporate advisory, which is where I sit, business services and accounting, wealth and asset management. And Prime's here, obviously as a sponsor because across all the verticals in our business, it touches this ecosystem, be it from advising on asset sales into a searcher, advising on the sale of that asset when the searcher's sort of grown and gets ready to exit that business, tax due diligence, virtual CFO, wealth management for those that exit businesses, and obviously in Ben's case, as a backer of acquisitions and operating of business, and across the spectrum of vanilla equity through to vanilla debt and everything weird and wonderful that they can structure in between. Ben, engineer by background, yep, and has spent time in sort of larger financial services organisations and engineering firms. Chris, similarly, a background with JP Morgan and Lloyd's, and I guess it's common with a lot of other profiles here, which is a bunch of really experienced and tenured people with tier one organisations on their CVs that are drawn to this EtA space and see huge opportunity in it, and particularly in the coming 10, 20, 30 years. I might hand over to Ben now. It was a much longer-winded introduction than I thought. If you just want to give us a bit of background about yourself and Altor.
Yeah, thanks, mate, and great to be here. So Altor is an alts manager. We have a mandate to invest in growth-orientated businesses, but across the cap structure. So we have a private credit fund and we have a growth equity fund. So we find ourselves having basically a lot of flexibility to structure investments across both debt and equity. We're very much macro-driven. We'll probably go a bit more into this when we talk. We're very much macro-driven around the industries that we're investing in. We've been around for about 9 years. Started off doing SPV investments, and then have funds now. So one of our funds has got its 7-year anniversary this month. And we were business founders who then sold our business into Prime Financial to kind of tap that network as well. So it's been a quite interesting journey going from basically a founder to back into a large corporate.
Kia ora, everyone. Chris Flavell. I'm what's commonly called a Mozzie, which is a Maori and Aussie. Based in Sydney. First meet Pete 3 years ago, just at the start of this this new journey. But I personally believe there's nothing new under the sun. You know, I think that the story that Rob LeBlanc gave earlier in terms of this evolution between private equity to venture capital to hedge funds to search funds is just an evolution of different forms of capital management coming together in different ways. And I think the thing that excites me most about the EtA community is this idea of human capital. So I think the focus previously has been a lot on financial engineering and finance capital, which I'd like to think I'm a bit of a specialist in, like my fellow colleagues here. But the emphasis that's there on human capital, and I think that there is a lot more in terms of that shaping that's done in terms of the search period, the optionality that's there for investors, the end of that search period for coming in and participating. I would probably see my business at the moment, AraCapital, is probably more of a gap funder that would come at the end of that, looking at self-funded searches. But really, this is just part of the evolution of where I think the market's at the moment. So, I think it's an interesting community, and I think that that there are some great opportunities in the market.
Good day. Thank you. Thanks both for intros. And Chris, you sort of half answered the first question that I was going to put to you, so I'll put it to Ben. But I mean, between us up here, we've probably seen more decades of cycles than we care to admit. But I guess for you, Ben, you mentioned that Altor as an investor, an owner of businesses and assets is macro driven. What are the tailwinds that you're seeing in sort of that EtA subset that sort of give you guys that desire to want to sort of really invest hard in this space and spend a lot of time and resource in this space?
It's probably how you scale it. So as a funds management business, we're all about scale. So we've got to drive funds under management. How do we participate quickly and as efficiently as we can as investors? So what I think that the EtA space brings is access to talent that allows us to scale quickly. And so our kind of exposure to EtA has been relatively new. I think I sat down after a year when that question was asked, how long we've been in the space or looking at the space, and everyone looks to Pete. It's because of Pete we're here and doing work in the space. We've traditionally done management buyouts, so we've been backing existing management teams and funding out either large parent companies or families out of their transition, out of their wealth. So we've kind of been in this space a little bit, but for us it's about how do we scale and getting access to that talent, how we actually find the right talent. I think that's one thing we're really grappling at the moment with, traditional search or funded search. So, but yeah, it's a scale game for us.
Thank you. And Chris, you mentioned earlier that you sort of see this space as an evolution of capital, of hedge funds, of whatever it is. How do you see it continuing to evolve from here? What does it look like in 10 years' time if you had to crystal ball it?
I'd hate to think it becomes homogenised like everything else. I think, when Ben was talking before about management buy-ins, management buyouts, again, a lot of these things have actually happened before. I think the big issue that we talked about at the last conference was just the generational dynamics. So the silver tsunami, the grey hair. Who are in this intergenerational wealth transfer that's going on of businesses, creates a massive opportunity. The reality is that those businesses are too small for PE to focus on. So this niche is a unique niche, and how that niche is addressed in terms of transition of companies, in terms of growth into companies that can be invested in by PE later on. So PE may, for example, become the exit for for EtA businesses.
Good, thank you. If I put it to you both, and I'll ask you first, Ben, if you think about sort of any successful or common attributes about searchers or operators that you've backed in your businesses, are there any sort of common attributes that stand out?
Yeah, two, coachability, but also success and track record. So that's not just necessarily exit, but participation in similar industries or business types. So after we consider macro or industry, we're down at the people level. So when we kind of filter through our investment process, so as a fund manager, as most people know, it's all about repeatable process, people, performance, and process. So as we kind of screen out on industry, we'll look at people, and that's really about coachability and background.
And Chris?
Yeah, I think, one common thing that I've found in my investee companies has been that quite often they're engineering types that need financial input. So in 5 of the companies that I've invested in, they've actually been engineer qualified that have gone through, which I hadn't really thought about before. But the other important component, I think, is that managers. I think the element of search that is also interesting from a fund manager's perspective or from an investor's perspective is that typically it will actually be investor dominated, and so therefore, if there is a need to change a manager, then that can happen. Not everybody works out in a position. I'm involved in an investment at the moment where they brought in somebody who should have been a very highly qualified manager from a listed public company down into a small platform company in the construction business, and they were just hopeless. They tried to bring in all of their systems, alienated all the staff, and they're having to be rotated out. They stayed in the position for too long. The company went from 5 million EBITDA per annum down to 1 million EBITDA and break even before he was turned over. And so I think this idea again of why search works so well is because you've actually got several sets of investors in there with different experiences, the ability to bring in other talent, and the ability to transition people in and out. So I think that's a very important component.
Okay, Ta. And I suppose on that topic, Ben, if you think about any investments you guys have made where you've backed a searcher or an operator and it hasn't worked out, any learnings about what either you got wrong or what that operator got wrong?
Yeah, it's always your blind spots. It's the things that you don't see coming. But I think it's probably more the finance function, I think, is where we see most failure. So it's not having good financial reporting function, not having a good CFO that's helping the management team understand working capital, cash flow, all those sort of things that are really important. So I think if we think about failures, we've had stuff that's, kind of been beyond our control. But the stuff that has been in our control is kind of finance function.
Okay, cool. If you guys think about the opportunities and deals that are brought to you by searchers and operators, what are sort of the triggers or markers that really pique your interest? Like as people in the room here are going about their journey of acquiring business and are sourcing capital for it, what's going to put their reach out above the rest, because there's something there that you know is a bit of gold for you that is going to sort of make you focus on that first?
I think resilience. I think a lot of these things, when you're, as most people would know, when you're doing DD, you're operating in a vacuum. Everyone's telling you the best thing about the business. There's a hockey stick growth in the numbers that you're putting in your IMs. So it's really hard to see through that. And then when you're kind of overlaying the extra risk around someone coming in, whether it's an operator or a searcher, I think that kind of sharpens the focus a little bit. But I think that culture element, which was touched on really well earlier, is super important. So we're really patient investors. So a lot of those hallmarks around what search is traditionally about, which is giving time, being patient, backing those individuals. But resilience is probably the most important thing for us, because things will go wrong. We've heard some great experiences already. So our automatic viewpoint from day zero is you get the keys and shit's going wrong, because you are operating in that vacuum when you do DD. So having someone who's really resilient, prepared to roll their sleeves up, it's got skin in the game, and wanting to listen and is coachable, they're the types of things that we're really focused on.
Yeah, I think. One of the issues is that's hard for searchers is the amount of capital that's committed. So, a lot of the companies I've been involved with historically, the reason why venture works is largely because you go through a process of having friends and family who invest alongside, the founder initially, and so the degree of capital and the degree of commitment of the searcher, I think, is important. The match of the searcher to the actual opportunity itself, and probably the last bit is really the shape of the deal. How many, what are the tailwinds in the industry? What are the, what's happening in the business as a whole? So all of those things come together to I think make what looks like a good deal.
Good. Ta. Ben, we were involved in a transaction last year on opposite sides of the table, actually, and one of the component parts of that for you guys was structuring, the commercial relationship with that operator. And that takes some time and some finesse, and isn't without acrimony and heartache ultimately getting where it works for both sides. But what are the key challenges that you encounter and pushbacks you encounter when you're structuring those sorts of things with a searcher?
I think it's alignment, clearly, in terms of as they're winning, we're winning, and as we're winning, they're winning. So I think that getting that alignment in terms of the earn-out structure, but also I think kind of imparting some wisdom with those individuals on kind of how we can help structure the deal and make sure they're getting a good deal as well. So I know it depends on how far they are through the process in terms of structuring up and finalising those commercial terms under a term sheet. But I think that kind of getting involved early as an advisor. I mean, a lot of the work we do is as an advisor, helping those operators and businesses and founders kind of really understand what they're getting involved with. But I think it's just truly about getting that alignment piece right and making sure those hockey stick numbers do come to fruition. If they don't, then there's an adjustment mechanism in the deal structure.
Chris, anything from your experiences?
Yeah, just similar. I think before we had the advisors up, the lawyers and the accountants, but maybe one of the reasons why search works well is because the investors are kind of there for 12 months as an advisor as the search is going through a process, and that might help bring out some of that and get that input into the deal structure and other things.
Good eye. What has I suppose worked best for each of you in terms of introductions from searchers? Is it cold reach outs? Is it finding a warm introduction? Is it it sort of doesn't matter. You're there to look at opportunities in an absolute view. Like, what are the ways that resonate best for you guys to want to get interested and look at something?
Yeah, I mean, I think probably Rob's first point, digging wells. So anybody comes up with an idea or puts a deal in front, then you try and at least give elements of why it might not work or why it might, sort of input as to whether or not you can help, obviously. But then if it doesn't fit, it's really going through the whys, and because hopefully that might help with the next one. So, I mean, just with the short time I've been involved with the community, I've looked at 10 different deals, mainly self-driven searches, but provided input on each of those. I haven't found one to go forward yet, but in most cases, in actually all those cases, the deals haven't gone forward themselves, for different reasons.
Yeah, and for us, we've only been approached by probably 2 searchers in terms of ideas, so we're very new at kind of getting exposure to that specific individual coming to us with ideas. The deals we've done before have been management buyouts, and we've done one management buy-in, where it was a existing management team that was in a previous portfolio company that came to us with an idea, and we backed them into that. So the way we're finding deals at the moment is they're generally sales, and we're working with that seller to find the right existing management team and bring them into the sales structure.
Good. All right, cool. Last question from me before I open it up to the floor for questions. Any immediate red flags that when something comes across your desk and you see, that marker or that attribute, you just go, no, this isn't for me? Like,
unprofitable business.
Yeah, I mean, every deal of the last 100 I've looked at, it's always, the EBITDA for the last year is always higher than what it was before. Everybody's always using the multiple on last year's EBITDA, and it's always higher. So it's always about the diligence that's actually there, the analysis behind the numbers, and the financial reporting, which has been said so many times before, that the financial reporting in smaller family businesses is very poor. That's where you need to do the work and focus.
Good. Thank you. All right. Any questions out on the floor? There's one hand up quickly.
I think for this time before, there's quite a few people here that are the searchers and capital, and for you guys being the capital side of it and the other capital people in the room, people that are searchers can be quite scared of approaching capital and talking about this, and I suppose there's 2 kind of models that come to you with an idea, or that come to you with the idea to search, which is the searching side. What's the advice you'd give to people to get in touch with you guys? You've both looked at a few deals already. There's a couple of people here that have obviously looked at quite a large number of them and transacted them. Do you guys want to be approached by people starting the deal? Do you want to be approached by people with an idea already well formed? We're in the process of it. Or how can you give somebody confidence just to approach you that they're scared of the capital conversation?
Yeah, I mean, we're only just starting on this journey, so I don't know if I can answer that fully, but we've spoken to people who are thinking about this industry, where we just might go out for a coffee and chat to individuals and try to give them some advice. And we've obviously looked at a handful of opportunities that have been shown to us. So I don't have a kind of a well-formed kind of view either way, but it's important that we're kind of giving as much advice as we can around what you guys are doing. So I guess I'd like to say that my email's always there if people have got questions. But there's a lot of opportunity that we're looking at. So it's for us, I think our view is that we want to establish an EtA fund. So that's kind of where we're heading. We're probably still 6 to 12 months away from having that in place. But I think that's probably the appropriate time to really start engaging and finding those ideas. And we're very kind of transparent about what it is that we look for. So that's kind of pretty easy in terms of you having gone through that filter to say, all right, well, if I'm going to put something in front of Altor, does it tick this box, that box, etc. So it's going to be a lot easier for us to then get to a term sheet stage and look at working with you on an acquisition.
Yeah, I think, I mean, as I said earlier, I'm not personally looking to invest in searches at this stage. I'm a gap funder for at the end of the process where somebody's short, but I'm always happy to give advice on a deal or to a searcher who's more advanced. I think the difference between a capital allocator, the ones here, to accountants and lawyers is that there's a clock going there, whereas we only really get paid when there's a deal that gets across the line. So the question's very relevant. What's the right time to engage? We wouldn't be here putting ourselves out here unless we were willing to do that.
Pragmatic response. I like it. Any other questions out on the floor?
Ben, you mentioned that you take a macro view to your investment decisions. What do you like from a macro perspective at the moment?
So the sectors we've invested in have been financial services, healthcare, defence industry, advanced manufacturing, energy transition. There's probably 6 or 7 kind of macros. We've been doing a fair bit in sports and entertainment recently as well. So that's one additional industry that we've kind of brought into the fold. So that's for us quite an easy filter. And the reason why we do that is because we don't want to try and pick the right industry cycle. So we're finding businesses that have got strong tailwinds behind them. That's an easier proposition to sell when we do look to exit, so we don't have to time the cycle. But also, shit's just going wrong with business all the time. So I'd rather be in a business where there's at least some likelihood of a turnaround if the tailwinds are there, despite the fact there might be some challenges that we've come across.
Sam?
PE obviously has a very defined and viable exit strategy. In EtA investing, how do you, as investors, think about exit, and what's your sort of expectations with searches that are going
Well, we've got evergreen funds, so that's provides us with a bit more sort of patient capital, I guess, or longer dated liabilities. So we're not as focused about establishing a fund, spending 2 years investing and then quickly trying to get money out and then looking at continuation funds where those things need longer term to exit. So I guess we're fortunate that we don't have to kind of think about it at a fund level what that looks like. But in terms of the exit of a specific business, then it's kind of traditionally 3 to 5 years, but we've got some companies that have been with us for 7. So it'll really range depending on, has the business achieved its outcomes and its objectives, but we're just super focused on IRRs. So IRRs are diminishing after 3, so kind of creates a bit of a hyper focus around thinking about a 3-year as a ideal kind of investment horizon.
Yeah, I think, funds are a bit of an issue, and the evolution we were talking about before, to me, the latest iteration that everybody's talking about is permanent capital vehicles, of course. And in reality, if you look at Berkshire Hathaway, if you look at Wesfarmers, they're actually permanent capital vehicles themselves. So I don't think there's anything new in terms of, Arbor Permanent or these new permanent capital vehicles. One of my investments is, I've been in for 25 years with the partners that I'm investing in. But part of the issue is really this diminution, I think, where public companies are going through in terms of what's happening in public markets and how private markets are now looking at how they get liquidity into those. So one of the things I think that EtA may have going for it is if you've got 13 investors, Luke, in your vehicle, then how do you create liquidity around that? How do you get that balance between the operator and the capital providers? When they want to go and make the next acquisition, how that pricing is done. So it comes down to value of the equity. But I think this new form of permanent capital is something that is here to stay and is probably growing. And the old equity fund is probably not quite as robust, because what I'm seeing in the market at the moment is family offices in Australia are basically pulling away from investing in venture capital funds and private equity funds, because the 20% carry is too much for them to pay, when they could be directly involved and have professional management or be supporting EtA themselves directly.
Anyone else? Good eye. Thank you, Chris and sorry, use the microphone. Thank you, Chris and Ben, for joining us up on stage, and Pete threw you into it. But no, appreciate your insights, and hopefully everyone out there did as well.
Thank you.